Good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100, being recorded on Saturday, December the 23rd, 2023. Again, if you listen to the beginning of the S&P, you realize that I did say S&P 500 and NASDAQ 100, but got into more detail with the S&P, and I didn't want to have a 2-hour update just for the S&P and the NASDAQ. So I concluded with the SPX and the ES into one update, and now doing the NASDAQ here in the second. I'm not going to go into such great detail as I did in the S&P in terms of the fundamental picture, but I'm going to focus on the technical side for the NASDAQ and what is yet to be done. So beginning here on the cash market, I have discussed that I made some degree labeling changes, and upon reflection within those were mostly in the S&P and not necessarily in the NASDAQ. But what is different in the NASDAQ is that the degree in terms of the cycle degree. And so beginning here, the NASDAQ being the NASDAQ 100 being a newer index, I went over and I really took a look at the composite, which has been around longer. As you can see, we're going back to the beginning of the 1970s for the composite index. And I realized that I had a lot of movement, of course, here in this index that likely was producing a cycle degree move. And so I switched from, I had originally put cycle one up here in the futures market, but then came back into the composite and realized that no, I had already labeled that differently, putting cycle wave one, cycle wave two, and then 1, 2, 3, 4, 5. And originally, even within the NASDAQ 100, I had already labeled this, which is the dot-com crash, the dot-com bust, as cycle wave one and cycle wave two. So now the comp and the NASDAQ 100, which of course is a lot less stocks than the NASDAQ composite, are in agreement in terms of cycle degree. So back over to the NDX. And what we have then, it goes primary degree 1, 2, 3, 4, 5, cycle 1, ABC, cycle 2. This was actually, in my personal mind, it was the equivalent of the 1929 to 1932 crash in the Dow Jones and the S&P. It was where the market lost most, if not just about all, of its value. And here in this index, the high in March of 2000 was 4816, where that low was 795. And that's about 83 to 87% of the value of the NASDAQ at that time, the NASDAQ 100. Fairly quick in that it took about 2 years. And lots of factors went into why that happened. So we're not going to go into a review of that, just to say that it was a major move, because here we have the great financial collapse of 2008, 2009, which actually ended up being on a primary degree for the NASDAQ 100 versus cycle degree here. So you can see price damage and just damage done to the NASDAQ much greater on this degree and to this degree. So cycle one, cycle two, from 2002, October of 2002, the NASDAQ began to put in its cycle third wave. Within that, it would consist of 5 waves of primary degree, of which we have primary one, covers the great financial collapse of 2008, 2009, which basically was based on the mortgages. So it was, again, a fundamental breakdown affecting banks, affecting interest rates, et cetera, et cetera. And so then we had primary 1 and 2. Then we broke higher, again, being fueled by zero interest rate policy, which was created by the Federal Reserve and the Treasury, so it was the U.S. government, and very effective. A lot of corporations got 0% interest rate loans that were paid back, but it gave these corporations the opportunity to expand, to hire, to build, and just go nuts in terms of price. So it was the great stimulus. There's a We're not going to get into politics, but it was a great stimulus program, and the market just roared in terms of a primary third wave. And that primary third wave carried us up to the beginning of the pandemic in 2020. So on February the 1st, we reached a high of 9,736, and then the pandemic came. And it was quite devastating. And we were all shut down. We all had to go in. We couldn't leave our homes. We really couldn't basically even go outside to go shopping because stores just were not accepting us. And we didn't have guidance in terms of what we could or could not do. Now, a lot really took place. But again, market collapsed in this fourth wave. I can bring this down just a little bit now. I believe I can go all the way down to there. Yep, I can. There we have that pandemic low. And then once again, the government stepped in along with the Federal Reserve and the Treasury Department, stepped in and started providing stimulus because it was a little bit different. We weren't necessarily seeing bank failures. We were seeing the failure that we as the citizens, as the workers, couldn't leave home to go to work. So we all had to work from home and we had to be able to make money. And then those who actually lost their jobs, because if you can't go into an office, the office didn't exist, the company didn't exist, things stopped functioning, restaurants, and many of the public service type of areas. So once again, interest rates start to really be cut and stimulus got put in. Now, this time it was the stimulus money that also went to corporations, but more so to keep their employees paid. So those loans also, we had, you know, pandemic, they were loans that could be forgiven, which means that the federal government footed the bill, or they were easily paid back at a very low interest rate. Nonetheless, it was stimulus and we had a blast. We just blasted off and we kind of went up to our ultimate high here in the NASDAQ in November of 2021, where the market reached 16,007, actually it's 767. But here's, oh, this is the NASDAQ, 16,764. The cash market I meant. On November the 22nd, 2021, the NASDAQ topped, the NDX topped at that level. Now, that level has been exceeded. So the NASDAQ cash has made some new all-time highs, both cash and the futures market. Whereas in the SPX, that market has not produced a new all-time high in the cash market. The future has produced new all-time highs, but the cash has not. Interesting situation over in that market. So here we reached cycle wave 3, which puts us in a cycle fourth wave correction. And that'll consist of a primary A, B, C. Well, right now, previously I was looking for the NASDAQ to probably drop sub 10,000 before putting in what I was going to consider a cycle degree B wave. Well, with my revision, it's primary B finishing, which it was before as well, but only a primary C wave down to put in the cycle 4. So it's a little bit different. So the first thing that I'm going to measure out, if I can get out that far, nope, I got to go out to that weekly. I mean the monthly. So let me go back out to my monthly chart. We're looking at this fourth wave. So we're going to take it from here, and I'm going to go down and use tracement tools. And right here, we're going to go one more. No, in a second. So we're looking, so this is going to give us our fourth wave. What this cycle degree fourth wave, where it can come in. Now, I'm going to bring it back down to that weekly chart. And so we're going to fix this high. And that high was actually 16,764.85. 16,007. Right up to that top. Okay, so from that level, we're doing an A, B, and a C. Well, here you can see the A wave reached 0.382, just dipped below it. And that was 10,676. With that low, basis to cash in October of 2022, that low was 10,440.64. So what are we looking at here? We're just now actually in the cash basis, just starting to break above that all-time high. And so basically, if we were to turn from these levels or thereabouts and start to drop, it would be a flat. We'd be looking for an ABC flat. And that's what Elliott was talking about. That's a flat. You don't get any closer than that in terms of the A wave, and the B wave high doesn't really break above that, just maybe a little bit, but not anything substantial. And then we drop back down in the C wave, pretty much reaching back about the low of wave A, maybe a little bit more. So again, the whole discussion of going sub 10,000 really kind of just goes for right now, until at least we get that cycle fourth wave, and then we do a cycle fifth wave, and then we're going to be continuing. Then we're going on a super cycle degree correction. Now, there's many reasons for really to make these adjustments because of the emergence of a exploding sector, artificial intelligence, AI. It has really hit. It is really dynamic. It has created a lot of upward momentum for a lot of the NASDAQ sector. Now, the actual takeover of artificial intelligence in terms of all of the functionality that it's going to have, all of the ability for artificial intelligence or computers and programs, algorithms, to really replace a lot of human beings and their jobs. So there's going to be a balance out here as to what essentially is going to happen. That does not suggest in any means that the market will not, in particular sectors, continue to climb, continue to find value in terms of, moving higher because of the necessity for the chips, the necessity for all the different support things that go into creating what we're working our way into. Now, I can't speak towards the future other than saying, well, I can give you what fibs are telling us. I can give you what an Elliott picture might telling us. But initially, right now, what we're confronting is how much higher do we really have to go? Because what we have sitting out there is, yes, a corrective phase. And that does not suggest in any way that artificial intelligence is not coming, is not going to take over, is not going to be the bread and butter for a lot of portfolios. I do believe that that is going to be the case. But that doesn't mean that stocks like NVIDIA, stocks like Microsoft, stocks like Apple, the ones that are out there that will benefit from artificial intelligence, plus all the different ones that will be also integrating it and will benefit from it, will not correct. But what I am saying is that, well, we saw that we do have the capability of dropping. Apple still produced computers. We still went out and we bought, et cetera, et cetera. So, but the market corrected. Well, we can do it again. And we can end up in that same area, starting from approximately the same area and drop back down and then turn around. And the next rally will break, will go to new highs and take us. And that, I believe, is going to be the era of artificial intelligence. I think that, along with all of the, I want to say subdivisions, but all of the component parts that will go into producing that sector, will, again, a lot of jobs, because we're going to need people to program, we're going to need people to build, we're going to need people, all of that things to function. But we're going to see a lot of things slip out, a lot of things slip away. So there's going to be a big change in a lot of areas at the same time. And so when that change comes, the market has to adjust to it. So certain things are going to drop out. So there will be companies that don't turn and become more based on artificial intelligence, or in terms of becoming more self-sufficient without the different things. And we can make comparisons and discuss, what happened when Netflix, for example, decided that they went into the streaming service. I mean, they basically were a mail order DVD service. If you wanted to watch a DVD, you just, Netflix sent it to you, and you sent it back to them. And then you got another one, and that's how it went. And that's what Netflix built its business on. But Netflix went streaming. Why send it? Why have all that interaction with people? Just provided a platform where they can come in, pay you on a monthly basis, watch what they want. And they built a catalog of television shows, of movies, of series, and then they became a studio and they started producing. So Netflix got onto the new technology, got onto the new way of producing and providing service, and became a large company, and went from what? Let's just say $25 to 400 and some odd dollars, with a $500 company. So again, that's just one example. But what happened when you had Blockbuster, which also, remember Blockbuster, there were Blockbuster stores everywhere. Sort of like Starbucks, they were everywhere. And then suddenly it was, the necessity, and people weren't going downtown. Starbucks had to close. There's a lot of stores. Well, Blockbuster chose not to move into streaming service. And guess what happened? Blockbuster went bust. Blockbuster went bankrupt. And there aren't any. I don't believe there are any Blockbusters left. So that is, one company taking advantage of it, the other one not. And we're going to see that happen again, but different arena. That was streaming services. What are some of the applications for artificial intelligence that some companies will take advantage of? Some companies will move to, others won't. Or will they? I don't know. That's out there. So in any case, I think while this change is happening, you'll see some drop, some will go. How and what effect that may have or not have on a larger index like the NASDAQ 100 or the NASDAQ Composite, or even the S&P and the Russell, yet to be seen. But I believe that there will be economic factors that are going to drive the market lower. I have more confidence now that artificial intelligence is not going anywhere, and it's growing exponentially at the moment. Crazy. And we're seeing that push and that rush of portfolio managers, asset managers, fund managers going like, we are going to participate there. Because we've already seen where artificial intelligence has already really taken over other things. Tesla, artificial intelligence in a car, electric, fuel efficient, right? Or stop creating pollution, et cetera, whatever goes on there. But Tesla Is it really the car itself, or is it the technology? Is it the technology that SpaceX? Is it the technology in Tesla that actually is fueling those stocks? And it is. Dropping, it's getting out of. And suddenly you see Ford, General Motors, the rest of the big three, the big four automakers shifting carbon-based to electric, but also more everything's computerized. We've been seeing that happen. So again, what drops, what pulls in? Are we going to be able to produce cars? It's like, so this is really the danger, because what happens when all of those assembly lines become computerized and just boom, 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 their computers put together, and bing, you're done. Tesla's going to see it happen. Ford's going to see it. General Motors, the other one that's also Jeep and all the rest of the companies, I don't remember the name. But what happens? All those people are going to lose their jobs, but the companies become more economically efficient. You don't have to pay a computer. So again, but what happens when that change comes about? What happens when we see how that affects our economy? How that affects government in terms of unemployment, inflation, deflation, etc. So markets will go through those moves, but there will be outstanding and light beacons within the market that will draw capital. But we're going to see a shift, and that's where I believe the markets will correct and rally, correct and rally. So and also, as I said with the S&P, to believe that the market, that they're talking about, oh, the Fed's going to cut interest rates, that immediately is like, well, we got to start buying now. That's not why they're buying. What's really fueling on these rallies is quite, yes, that is part of it, but it is primarily tech and artificial intelligence. So the NASDAQ is outpacing, but the S&P has the Magnificent Seven. Then the Russell has some also of those tech stocks. The Dow, Apple, Microsoft, Intel, they're in the Dow. So again, we're going to see shifts. And I do believe that there is plenty of room, and there's plenty out there that could create a larger corrective phase now. And I believe that's what we're heading into. So now let's go back and look at this weekly chart. I'm going to start to take it down. But what I want to do is I can put up this chart, which actually I'm going to do just to show if we really do drop into I can take that, leave that one and put these on. This would be for an irregular B wave. I've talked about this before. Well, here are those calculations for the cash market. In the NASDAQ, that is 18,257, 1.236. 19,180.70, that's 1.382. Elliott wrote about this. And as I mentioned in the SPX, I'll do it again here in the NASDAQ in case you're not watching both. The NASDAQ market, according to Elliott, all-time high, first correction. Elliott spoke very clearly about how when you reach a major top, that the market will tend to correct that high twice. And you're like, well, how's that going to happen twice? All right, here you go. Wave A. If this B wave continues as I think it could, and we get above to new all-time highs, which we already are in the futures market, then there's the first correction. We go to a new high, and we come down, and there's a second correction because we're going to come back down to that level again. First correction, second correction, and nothing more than an A, B, irregular B, and then a C wave. So these are possible, and this is what he was talking about. And this is what I'm now bringing to you. Not definitively done yet. So, and we're just now beginning to move to new all-time highs here in the NASDAQ, in the NDX, in the cash market. So there we have it. Now, let's start to break it down. Let's go down to the 2 hour, the daily chart. And again, here we're now. Here's the ABC. There is the primary A wave. And here you can see that we have the calculations for the primary B wave. We have 100%. That brought us right up to 16,764. So we got just above that. But you can see now what can we add? Now let's just take a look at what we can put in for a C wave, right? Because what I'm looking at, there's the A, there's the B, 1, 2, 3, 4. And we're inside minor wave 5 to complete intermediate wave C to put on primary B. Okay, so what can we say about the primary C wave? Well, we already see that we went right through 2.618. Well, we go back, we edit, and we can take all those off because they're no longer valid. Let's look at 3.618 and 4.236. 3.618 is 16,401. Right, we got that. We just go edit that. I'm going to take that right out. So what do we have left for the C wave? 17,382. Okay, so still not quite up to the fib levels associated with an irregular move on this degree. Those are the levels, but it is new all-time highs above what we did in November of 2021. So again, irregular, but fib, pretty clear. Yep, big move in terms of C equaling 4.123, 4.236, excuse me, of the A wave at 17,382. So we got that level. Let's keep that there. Now, we're going to start coming down. In fact, I'm going to go down to my 4-hour chart, and we're going to start looking at this. We're in, it's again, intermediate wave C, 5 waves of minor degree, minor 1, 2, 3, 4. We're in minor 5. So let's take a look. Here we are, at bottom of minor 4. Minor 5, what's inside? 5 waves of minute degree. 1, 2, 3, 4. We're in minute wave 5. Wow. Okay. So let's take a look at minute 5. What can it do? Well, first thing I want to do is I'm going to use fibs again. I'm going to compare my minute wave 5 to minute wave 1, and you're going to see how that got blasted out of the water big time, right? So again, I go and I make my adjustments. I take all that off because it just doesn't fit anymore. So what do I have left? 3.618, 4.236. 3.618 is just above at 16,890. But 4.236, 17,092.93. This is basis the cash. Okay, so right now, cash versus the future, the NDX closed at 16,777. The future closed at 16,962. So it still has about $210 premium in it. Okay, so if it has that much premium in it, what are we looking at? Here, we're looking at the future being above 17,200, 17,300. But here, if this really gets itself going, which right now, it kind of a little questionable, right? Either that or I'm going to have to recount the cash as being in 1, 2, and this whole thing is a third. That possibility does exist. So I just have to break it down. 1, 2, 3, 4 internal. So minuet, and this is wave 3. And this is going to go into higher, my new 5th wave. That's a possibility. I'm not necessarily doing that right now. So I still think that what we have next right? We're looking here, 16,889. Okay, new high. Would break 5 would be above 3. Let's add. So this is minute wave 5. Now, is this complete? Possibly. So now we add one more. Again, same basis. I'm going to go wave the wave 5s. Now, look where we are. 100% is right back to where we've already been. So, I think that one not really usable, but I'm going to leave it there. This one definitely not. 618 gone. 100%, well, yeah, could. And basically what it just tells you is like that this level really did complete the whole rally, the whole shebang. And it could. That could get right back up there. We got 5 and that's it. And then they just start to tumble. But if it manages to break above, the next level would be 1.618, 17,029, 17,030. Then we're into that 4.236, which is minute 5. Look how within 70 points of each other there. That works. 2.618 takes us out to that 4.236 for this. So again, did I do that correctly? Let me just go one more out. No, let me put this one in. That was for the C wave, 4.236. I neglected to put in minor wave 5. So let's add that one, see what we get. We know we can take these out. 618 done, 61 and 1.618 is still good. So we take those out. Minor wave 5, 100% we've exceeded substantially. So it's gone. Our next level, where minor wave 5 would be equal to 1.618 times the length of minor wave 1, second most common, 17,633. All right. So minuet wave 5, well, we're getting up there. We're above 17,000. So we're now beginning to build a picture where this fifth wave, all of them, minor, minute, minuet, should get us above 17,000. Now, I'm going to bring it back down. Let's take a look at that 4-hour chart. Let's open it up. So what we got going on right here, same deal as we had in the S&P. There's a possibility that this could have ended the whole thing. That was a major decline last Wednesday against reaching, again, new highs and turn around and drop as heavily and as strongly as it did. As I mentioned in the S&P, 90% drop, huge drop. But then this one was a 90% gain. It's like, okay, wait a minute. What are we doing here? Why is this so confusing? Well, because the market is. We're seeing a lot going in and out, and we have 0 DTE options, which really have added a whole new layer to analysis because they are a beast in and of themselves when they expire on that day and don't have that follow through the next day. So it becomes like, well, what really is going on? It's just another layer. But in any case, we may still be in that fourth wave. In which case, what are we dealing with? Well, we're dealing with an A, a B, and a C. And as I showed before, and it could be the same case here, we come into a C wave, we come back down, don't really get that much lower than 16,552. Again, basis the cash. So we don't get too much further below that, maybe a little bit below, and then we move the 4 over, and then we rally again in a fifth wave. Again, next week, last week of the year, a lot of position squaring. Again, buying in, selling. What do they like? What do they don't like? What do they want to take profit in? Book it for 2023, move on to 2024. all kinds of things. So to particularly say it's this reason, that reason, chalk it up to year end. Truly, chalk it up to year end. I know that we will have some things going on in terms of what the market, economically, fundamentally might be doing according to numbers. But I think the majority, it is year end posturing, position squaring. Pretty much, period. Okay, so what we have is the ability for the market to go up. We have the ability the market can come back down and then rally again. But overall, what my fibs and the count are basically telling me, upside is not over yet. We're close, but it's not over yet. And we still have a fair piece to put in. Almost, considering where we started, 14,000 is where this last leg started, and we're now knocking on the 17,000's door. It's 3,000 NASDAQ points. That's a pretty big move to be doing since October, since the end of October. That's pretty big. November, December, 2 months. Wow, a lot of points. All right, let's go over and take a look at the NASDAQ futures market. Also taking everything off. So let's go back out. If I go back out to that monthly max, you're going to see, there we have it, the great NASDAQ crash, the dot-com bust. And then we have primary 1, 2, 3. There's the pandemic. 4, 5. Cycle wave 3. We're in a cycle wave 4. So I'm going to bring that down right away to our daily. Here is A, B, C. Where's my C wave? There it is. There's the C wave. There's primary wave A. This is all primary wave B. We have an A, B, and we're doing 1, 2, 3, 4. I never really like this, but it works as a 4. There's no overlap. We're good. We move forward. Now, where can I start to add some stuff? Okay, let's go back down to that 5-week. Let's look at the A wave. And again, we're looking at what happens if it becomes irregular. Again, I take all of those lower levels off. I don't need them. I'll leave the 100, but it's already gone. So I'm going to take it off, and I'm going to put the 2 that are reflective of what the potential is. If we're going to continue higher, and it's really going to be a blast north, well, good. We have 18,250, 19,167. Those are the 1.236, 1.382. Those are the Fibonacci relationships for an irregular B wave as it pertains to this corrective phase. So, same story now. The all-time high, which in this market is 16,767, gets corrected twice. There's the first time. We run up to another new all-time high in a primary B wave, and that high gets corrected again. Or the highs get corrected twice. And we come flying back down. Now, being that this is still going to be a flat correction, if we get up this high, then we run fib 1.618 for the decline. If we kind of top out not too much further north than where we are, then sub 10,000 is not, it still might be, but I think we touch it. We don't dive below it. I think we touch it and then we go. That's my major differences there. Okay. So how do I want to figure that? If I got to really go on the basis of, now we're going to add some others, and then I can add those fibs. But if we're saying there, you're looking at sub. You're looking at 1.618 back down, and it's likely going to be about 9,000 something, but the higher 9,000s. But now we want to start to see what else we got in here. Now we got the C wave. So let's take a look at that. So we're going to go from there to there to there. Oop, there. Now 2.618 already gone. So I'm going to edit this out And we're going to take all of these off because they've already been exceeded. So what do we have left in terms of C wave, where the C wave can come in? Aha, look what we have. Again, this is basis the NASDAQ. 3.618 has been already exceeded. I go back in, do an edit, get rid of that one. What do I have left for wave C? 4.236, 17,680. Okay, there's our first level on an intermediate degree. Can go up that high. Now, let's start working it down. What else can I do? Well, I'm going to be looking at, that's 3. I'm going to be looking at this one. And let me go down to my 4-hour chart. And yeah, it's going to be a little bit different because I got to move this because of the change, the contract rolls. But I'm leaving those in because they fit on that chart that I created it on. Otherwise, I got to move this up and right where they are. But my next one that I'm going to put up, the next one that I'm going to put out is where I'm going to be looking for wave 1 to wave 4. I'm at wave 5. So here, I got minor wave 1 to minor wave 5. Right there. So those are all gone. So again, I'm going to edit the 618 and the 100. I got 1.6, 2.618. Let's take a look. So 100% has already been gone. Well, 1.618 is 17,913. Well, okay. Well, 4.236 for wave C is 17,680. Well, what if this fifth wave gets up, close? Well, those are our levels for minor 5 for intermediate wave C. So we're already up in a cluster up here. All right, so now we can continue. I'm going to bring this down. I'm going to look at this next, this hourly chart. And now we're inside here, right? I got to go back. Well, sorry, I got to go back out to my 4-hour chart because I got to put one more layer. And this one is the one that's going to be most difficult because that wave 1 was so small that everything may become insignificant right now. Nope, we're likely, we'll put in our edits. All that's been surpassed. We're going to 368, 4236. Okay, well, we got a little bit lower, but now we have minute wave 5. 17,103, 17,304, 3.618, 4.236. We have our other numbers up here. If they're really decided, and because that fifth wave can just like roar inside its fifth wave. So let me add that last piece. And that's going to be for this fifth wave. This is saying this fourth wave completed at last Wednesday's low. All right, so here we have it. I'm going to edit this out, clean it up. Those two have been exceeded. Here's where we sit. 1.618, 2.618, 4.236, 1.618. Fifth. Okay. We have a little bit of a match there. If we push further, the minute fifth, it still is good, but the minuet fifth, 17,857, oh, there's that C wave up here. So we have things that start to match up. So we get our levels and they kind of fit and they work. That doesn't mean that's where the market is going to go. These are the potential. We're more interested in what the actual wave pattern, right? We got this extended third. Will I get a little bit of an extended fifth? Possibly. Now, again, here's well. We might get another wave down in an ABC. I'm adding all of this, okay? This is the work. So here, if we get down to here, we're basically pretty flat. Oh, no, sorry, that was wrong. Let me get rid of that. I did that wrong. Remove that drawing, and I'm going to go A, B, C. That's what I want. So you can see 100%. We're just below the low we already created last Wednesday. 16,726, 100% for a C wave down. And then this 4 gets, the reason I had to leave it in parentheses, because it still may not be done. I don't have proof that this is done. This was sloppy. We came off on Friday. If we follow through on this, come Christmas evening when Globex opens, and then in Tuesday when we get back, we drop down to 16,026. We hold, we turn, we rally. 4 gets pushed over. We're in a 5th wave. Those numbers will change a little bit, not by a whole lot, but they'll change a little bit, give us a little bit more upside potential. Maybe we end up right there at that 4236 number. But I have to tell you, we're trading at 16,880, and we have potential to go to 720. I mean, that's a good trading. Close. If you're a long-term trader, you're close. We're very close. How much you want to hang on, whatever your situation might be, that you got to hang on for these few extra points. As a day trader, plenty to do, plenty of money to make. So again, there's the whole picture for the NASDAQ. Moving averages, beautifully, just sitting pretty. The 8 did come back down, cross that the 20. Now it's back up, resting just underneath it. So we have the 8, the 20. They'll straighten themselves out, because we could come down and we might break the 50, which will drive us right down to that 100%. If we break the 50 period, the 4-hour 50 period moving average, it'll drive it right down to there. But we have the 200, the 100, the 50. Basically, these will straighten themselves out and will be still in alignment to go up. So basically, we are in alignment to go up. And that's it. That's how I'm going to leave the NASDAQ. Hopefully not quite as long as that S&P. It's very detailed in the S&P. So, but here you have it. So our next update for the NASDAQ will be on Tuesday, December the 26th. Once again, Merry Christmas, everybody. Have a safe holiday. Enjoy family. Enjoy whatever it is your choice is to do. Have a good time.